All right, my friends, we made it through the inspection. We're ready for the insurance video. This is something that I better know something about as an insurance agent myself. You would think I'd be able to explain the insurance part. We'll see how it goes. We're definitely going to tell you exactly how homeowners insurance works, give you a little inside tips and things of that nature. So back to the master checklist. We can now check off addressing our inspection issues. You had your inspection. Maybe you had some issues. Maybe you didn't. Maybe you had to go back and forth with the seller. I don't know. I hope that you shared it on our Facebook group, no matter what happened, so that we could get a sense of it and other people could learn from your experience as well. But one way or another, we have addressed the inspection issues and we're moving on. Or you're watching this video before the inspection because you just want to see the insurance part, because insurance and inspections are kind of happening at the same time. So whatever your situation is, we're going to dig into it. What you'll learn in this video is you'll get the inside scoop on what homeowners insurance covers, the best price coverage combination, and how the process works associated with your closing so you make sure everything gets done right. Fun fact, in the 1800s, homeowners insurance was only for fires. In fact, if you didn't have a fire insurance policy, the fire department wouldn't help if you had a fire. If you ever go to Washington, D.C., some of the old neighborhoods that are still kind of cobblestone and all that kind of stuff, the old structures still have a big metal thing right by the door that showed that whether you had insurance or if you didn't have insurance, you didn't have that big metal thing. And if you had the big metal thing, the fire truck would come and try and put the fire out for you. If you didn't have the big metal thing, you were on your own for taking care of fires in your house. Thought that was wild. That was an old piece of information from homeowners insurance. So what does homeowners insurance cover? We're going to break down basically four parts. The first one is called dwelling coverage, and this is coverage to repair or replace your home when certain kinds of damage occur. So this is about coverage for your home itself, the structure of your home. If you have a fire, a tornado comes through, hail, wind, lots of different kinds of things are covered. And if they do damage to your home, your insurance policy is going to come in and make you whole again or fix that problem so it's back to the way it was before. So dwelling coverage is the first coverage, and this coverage has nothing to do with the market value of the home. And what I mean there is on your insurance policy, you will see a number. You'll see a value, and that is the dwelling coverage. That is likely close to the purchase price of your home, but it could be vastly different in some ways because insurance companies are figuring this based on what's called replacement cost, what they believe it would cost them to replace your whole house, to build the foundation, to build the walls, to put up the drywall, to put on the roof, to hire all the contractors to do all that stuff. They're trying to figure what it would cost them to rebuild your whole house. That's the number you're going to see as the dwelling coverage on your policy. It may or may not be close to what you're buying the house for. Those two things don't really connect with each other. The only time that they would need to connect is if the dwelling coverage limit, the replacement cost on your house, is less than what you're borrowing from the mortgage company. So if we figured your dwelling coverage amount, the replacement cost on your house, to be $150,000, but you're buying the house for $200,000 and borrowing $160,000, then the insurance company is going to have to cover the loan. So even though it's higher than the replacement cost, they will have to increase your dwelling coverage from $150,000 to $160,000 to cover the loan situation that your mortgage company will want. So that's the dwelling coverage for the house itself. It's really the only coverage that your mortgage company cares about because these other things aren't as associated with the loan themselves. Let's talk about other structures. Other structures coverage is the limit of what you have available for any structures that are on your property but not attached to your house. This could be pools, detached garage, barn, things of that nature, structures that are on your property but are not connected to your house. That's what other structures coverage is. Personal property coverage is the coverage limit for your belongings, your stuff. So it's all the things inside your home and what it would cost to replace those. So if you think about all your stuff and imagine trying to replace it, I mean, even just your wardrobe is going to be expensive to even replace at Target. You got to buy all those things over again. And so you want to make sure you have enough coverage on your insurance policy for your belongings. That's the personal property coverage limit. And finally, loss of use. And what this is for is, if you have something bad happen in your house and you're going to have a bunch of contractors come in and fix it, you don't want to be living there, which means you'll have to live somewhere else. And that's obviously going to cost money. Loss of use coverage covers for that other living space for the period of time that you have to be there while your house is being fixed. So that's loss of use. The next one is liability coverage. And liability coverage is coverage for bad things that happen to other people because of you, your family, or your pets. Dog bites can happen. A kid comes over to a party and gets hurt. All kinds of you hit a golf ball and it goes through someone's windshield. All kinds of bad things that happen to other people can be covered by the liability coverage on your insurance policy. And so you want to make sure that you have a solid limit with that. Finally, on insurance policies, there are exclusions. So these are things that are not covered, and that's an important part of the policy, things that are specifically not covered. Some common examples are earthquakes, brush fires, and natural floods. There's lots of exclusions, but don't worry too much about it. I think that if you have a reputable insurance agent who is putting together a solid insurance policy for you, then they're going to address a lot of the important stuff. Things that they can't address, like natural flood, you just have to know, that's not covered under your homeowner's insurance policy. You have to get a separate insurance policy for that if you want to have coverage for it. If you're in a place that has lots of brush fires, your insurance policy may not be able to cover brush fires. And if you're in a place that has lots of earthquakes, the same thing. So understanding the exclusions is important, but it's also a good reason to just have a good insurance agent and know that you can trust them to put together a solid policy for you. Finally, a deductible. This is the amount of money that you agree to pay in a claim situation. So if $5,000 of damage has been done to your house, and your deductible is $1,000, then you're going to pay $1,000, and the insurance company is going to pay $4,000. So deductible is the amount of money that you agree to pay in a claim, and generally, the higher your deductible, the more that you agree to pay in a claim, then the lower the price you pay per year for your homeowner's insurance. So one way to bring down your insurance premium is to increase your deductible. Of course, that then means if you have a claim, you have to pay that extra money out of pocket. So generally, when it comes to deductibles, I say $1,000 is the best option. You can ask your insurance agent to show you different options and see, but with most of the companies that I work, if you look at different options, the $1,000 deductible is the best balance of price and coverage. So there you have that. What about some inside tips from an insurance agent? Well, my number one tip is if you can combine home and auto. Insurance companies give you great incentives to work together on home and auto. And here's the reason. Homeowners insurance is not very profitable for insurance companies, and auto insurance tends to be more profitable for insurance companies. So what do? Well, they create deep discounts on your homeowner's policy for attaching your auto. They're going to let you save money for connecting your auto because they know while they may not make much money off the home, they can make money off of the auto. And so having both of those together makes a lot of sense. There's more reasons than just that to have your home and auto together. It's really important to just have the same insurance agent and same company. Sometimes when you have your home and auto together, if there is a claim that happens with both your home and auto, like hitting your garage, then you only have to pay one deductible out of the two. So there's some positives that come with putting your home and auto together besides just getting the discount. But the discount is usually a big one and an important one. So my biggest insider tip is if you can, combine the home and auto. Another one is working with local independent agents because they usually have the best combination of price and coverage. In an independent agency, there are multiple companies. And so In that agency, there's competition for your business, even just with that one place. So at Shine Insurance Agency, the agency I own, we have many companies, but 3 main companies that, are kind of vying for your attention. And so that creates a healthy competitive environment where we're more likely to have solid pricing for you than other options like the big captive agents. So in my opinion, I may be a little bit biased, but a local independent agent usually has the best combination of price and coverage. And then generally the extras on your homeowner's insurance policy are worth it. Now you get into really like the gory details of all the different coverage options that you can have on your homeowner's insurance policy, but usually there's just like an extra package, a package plus or some kind of thing. And in general, that's going to be worth the money that you're paying. So generally, the extras are worth it. I suggest carrying at least $300,000 of liability coverage. If you have more in assets or money, increase that amount. Make sure that you're protected. If something bad happens, someone hires a personal injury attorney, you want to make sure you have enough coverage to protect your assets, the things that you own, the money that you may have put away in different places. Talk to your financial advisor about that for sure. But carry at least $300,000 of liability limits at the minimum. Last insider tip, there are huge variations in the kind and quality of insurance policies. Find an agent you trust and don't get suckered in by a low price, stripped down policy. Yes, you want a good price on your insurance policy, but you don't want to sacrifice coverage. And you really, when you have something bad happen, you don't want to call your insurance agent and them say, oh, sorry, you didn't choose that option. Or we didn't include that because we wanted to show you the lowest price. And that's what you don't want to happen. So you want the right balance, and an agent you can trust is going to do that for you. So that's kind of the inside tips on the insurance and insurance policies. So how is it going to work in the process of you purchasing a home? How's insurance factor into the whole process? Well, it has kind of 3 parts. The first is after the accepted offer. After the accepted offer, you want to get a quote for homeowners insurance. You want to go to that local insurance agent and say, hey, I've made an offer on a home. I'm planning to purchase that home. We're in the escrow period. Can I get a quote for homeowners insurance? You want to give the quote to your mortgage lender because they're going to be figuring that into the whole picture of your monthly mortgage payment that you'll be paying after you purchase the house. You're paying for principal, the amount you're borrowing from the mortgage company, interest, the amount you're paying them for the right to borrow the money, and escrow account, which is your insurance and your property taxes. So when you give that insurance quote to the lender, they can figure that into the process and give you a more accurate idea of what the monthly amount will be that you'll be paying for your mortgage after the home closing. So you want to give that quote to them right off. After the inspection, once you've gone through that inspection process, because that inspection process can be a big hurdle sometimes. And so after the inspection, things look like they're definitely going towards closing. You've got the mortgage company getting close. Now you've had the inspection done. You want to tell your insurance agent it's go time. And what they're going to do is they're going to ask you to sign an application to put the policy in place. That policy will likely go into place the day of your closing. So that will be the effective date of the policy. And once they have that signed application, then your insurance agent will send a certificate of insurance to your mortgage lender. So they're going to send proof of insurance to your mortgage lender as part of their process. And that's a document that your mortgage lender needs to be able to get cleared for your closing, to be able to have the mortgage company say, okay, we're going to pay that money at closing. They have to see a certificate of insurance. So you want to get that taken care of, really right after the inspection, or a couple weeks after the inspection. You want to make sure it's taken care of at least 2 weeks before the closing. That's kind of the latest time you want to deal with it. So the last step actually happens at the closing. And at the closing, you have all sorts of closing costs that will be on a ledger there. And we'll talk about that in the closing video. And one of those costs is a full year of your insurance premium, your homeowner's insurance premium. So that will be a cost in your closing. 1 year will be paid. And then after that, it will be a part of your mortgage escrow account. Sometimes you pay your homeowner's insurance on your own, but almost always it's paid as a part of just your monthly mortgage payment. We'll talk also about that in the future. So at closing, there will be a line item on your documents that is 1 full year of insurance premium. That's perfectly normal part of the process. What is the rookie mistake for this video? Rookie mistake, I see this all the time. I try and help people out as best I can, but it always adds to the frustration of buying a home when you forget to get insurance until the last minute. There's not necessarily anyone reminding you to get insurance. Your lender should probably remind you, your realtor could remind you, but sometimes they forget about these things too. And so getting your insurance is a great thing to do early. Forgetting until the last minute can, cause problems or even break down the process of having your closing when you think you're going to have your closing. So get that insurance piece taken care of early so you don't have to worry about it. All right, what did you learn today? You got the inside scoop on what homeowners insurance covers, the different parts of coverage that you have on a homeowner's insurance policy, the best price coverage combination, how to get your best price and some inside tips on that, and finally, how the process works, your insurance connected with the closing process. The next video we're going to watch is about the appraisal. It's a little known thing that goes on. Oftentimes it's because it's not super connected with, your escrow period, but it's a super important part of specifically the mortgage and what happens with the mortgage. I'll explain all of that in step 7, the appraisal. So head over to the Facebook group right now and share how you're feeling. Were you able to get an insurance quote? Did you have questions about the details of the insurance policy? Obviously, I will have some insight there for you. What are you surprised about, confused about? What are you wondering about? Let us know over there. We're over there and ready to answer your questions. All right, I'll see you in step 7 with appraisals. Until then, have a wonderful day.